series. My name is Luke Morris. To advise. Is to design these sessions as something between a webinar, a podcast, and a little bit of a training session. It's designed to be short and sweet and as interactive as it possibly can be. Given the numbers that we have on the call, we take steps to mute everybody's microphones. So we would ask if you wouldn't mind keeping those microphones muted, but you can contribute to the discussion via the chat box on the right-hand side of your screen. My colleague Sarah is on the call today, and she's working with me to address any questions that you might have, so we can deal with things in real time as they come in. What we are trying to achieve with these sessions is content that's timely, relevant, easy to digest, and hopefully engaging. And we've set 3 ground rules. We're doing these pretty frequently at the moment, weekly at least, or more frequently where events dictate. For example, the bounce back loan, the measures for which, as we'll find out, were finalised only over the weekend. We commit that they will last no more than 30 minutes, and today's session will probably be closer to 15 or 20 minutes, frankly, because it's pretty straightforward, but there are some important aspects that you need to be aware of. So we would encourage you to ask any questions as we go. And we do want things to be as possible. So please do use that chat box, raise questions so that everybody can see them. And we can deal with them in real time, or if we need to, we can do it in summary at the end of the session. So we hope that you find this useful. We hope that you're able to give us feedback as well. We welcome feedback, and you can send emails to our main address, which is hello@scruttonbland.co.uk. But now let's get on with today's subject, which is the bounce back loan scheme, and what exactly the Chancellor thinking. So just by a little bit of background, bounce back is really Rishi Sunak's latest initiative, really submitting to the pressure that he came under by the lenders, by the banks, to provide a 100% guarantee to cover their risk and to give the banks the confidence to advance cash to businesses quickly. So you will, I hope, be familiar with the Coronavirus Business Interruption Loan Scheme. I shortened that to CBILS. CBILS faced quite a bit of criticism from business lobby groups, from companies, for not getting money out quick enough, for not turning applications around quick enough, and in some cases for not hitting at the right level. There were some businesses that were not large enough and not small enough. They were sort of caught in the middle. So it's been through several iterations, but the one thing the Chancellor didn't change is the aspect of CBILS that only government backed 80% of those loans that lenders made. So the big announcement, the big thing with the bounce back initiative, and it overlaps with CBILS, as we'll find out later, is that it does provide that 100% guarantee to the lenders. Final details were only settled over the weekend between the Treasury and the banks that are actually providing the credit. And the scheme opened yesterday morning, 9 a.m. We expected a real flood of applications to come in. And I noted a report in the Financial Times today that said that there were 110,000 applications made yesterday. And I did a few of those on behalf of some applications with NatWest and with HSBC. So I can speak firsthand specifically about those, and I will do in a moment. But let's first look at a little bit of what is this bounce back loan scheme. Who can apply for it? What are its terms? Well, the idea is that companies of any size are able to apply, but it's really aimed at smaller businesses. Businesses that really have fewer than 10 employees, and of course, the country's nearly 1 million sole traders. That's who it's aimed at. The main stipulations are that you must have been trading on the 1st of March 2020 to qualify. And you must not have been so-called undertaking in difficulty, an undertaking in difficulty as at the end of last calendar year. There's a definition for what it means to have been an undertaking in difficulty at the end of December 2019, which I will come on to later in the session. It's important to note that any individual, other than somebody who is a sole trader or somebody who is acting on behalf of a partnership, cannot apply. So that, these are designed for business, and indeed the business lobby groups have been pretty much one voice in saying that Sybil's, the previous loan scheme that the Chancellor announced, hasn't really worked for small firms. And those same business lobby groups are very keen to point out that it's those small firms that comprise 99% of the business community by number. So under the bounce back, you can borrow between £2,000 and £50,000 for up to 6 years. And the cap, other than the £50,000, is a maximum of 25% of turnover. Now, where the banks have got comfort from the government is the government has said that it will cover interest and fees on a loan for that first year. So businesses start their loan repayments after the 12 months, and there's a flat interest rate being applied of 25%. So to give you the sort of illustration that I was looking at yesterday with the HSBC example, this was a client who was looking to obtain the maximum possible under the bounce back scheme. They had revenue in excess of £200,000, so they met that 25% of turnover criteria to hit the £50,000 loan amount. And the sort of the illustrative example that HSB has sent is this is a 6-year period. The repayments start after the end of 12 months, and then it's paid off over 60 monthly installments, interest rate of 2.5%, monthly repayments £887.37. And I think a lot of businesses, because this is not, although it's aimed at smaller businesses, it's not restricted to smaller businesses, will probably be looking to gain the maximum amount they can under this scheme. And that gives you an idea of how much will be payable over the course of those 5 years after the initial 12 months. So for borrowing £50,000, you're ultimately paying back £53,242. That gives you an idea of the level of support that the government has provided. And because of that level of support, because of the 100% underwriting guarantee, it really gives the banks confidence to offer that lower rate of interest. So you can see that's pretty cheap finance, and it's no surprise, I think, that there's been significant uptake. How is the bounce back loan obtained? Well, you may recall from the Sybil scheme that some 50 or so lenders have been accredited by the British Business Bank. The British Business Bank is the financial arm to sort of oversee this whole thing. Now, funnily enough, yesterday morning, 9 a.m, the scheme opened, and I went to the British Business Bank's website, and of course, it had completely crashed. But that didn't really matter, because all it does is signpost you to HSBC or NatWest or Lloyds or whoever it might be, and their particular bounce back page. Really, the British Business Bank only gets involved if things go wrong. It sort of deals with that guarantee should it need to be invoked. Anyway, the accredited lenders, of the 50 or so that are accredited for CBILS, most are ultimately expected to offer bounce back. But as of now, I've just checked, there are 11 banks that are participating in the scheme and have been accredited for the scheme. Interestingly, yesterday morning I did my application for NatWest about 9:30 in the morning, and at that point of the morning HSBC had not yet been accredited. That actually happened halfway through yesterday morning, so this is a very live, fluid thing. So all of the main high street banks are now included. But it's worth pointing out that the likes of Handelsbanken and some of the other challenger banks, the Aldermores and Shawbrooks of this world, are not yet accredited under that scheme. And that's relevant for a lot of people for reasons that I will come on to shortly. But the idea is it's a simple online form. It asks for details such as annual turnover, and that's the year 2019, bank account number, the amount of credit that's being sought, whether or not the business has been adversely affected by the virus, to which the answer needs to be yes, because this is a loan specifically for that purpose. And it also specifies that the borrower doesn't have to offer security or personal guarantees. Now, the mechanism by which the two banks I looked at are applying this is slightly different. The NatWest process was pretty much to register some very basic information to then receive an application form 24 hours later, and that actually happened this morning, so I completed that this morning. The HSBC process was a web-based application form that I could do straight away. Interestingly, with the NatWest process, they specified that they were preferring existing customers first. So if you're a new customer, if you're in that situation where perhaps you don't have existing banking relationships with the main high street banks who are part of that 11, then you're slightly disadvantaged insofar as you need to establish a new banking relationship before you can apply. And the banks, of course, will need to go through their usual due diligence and so on, which they would do with any new customer. And as I say, yesterday, NatWest were explicitly not taking applications from people that didn't have an existing banking relationship. HSBC did seem to be. So I think that's just a time thing. You don't have to stick with your existing lenders, but I suppose the idea with this scheme is to get the cash into the account as soon as possible. Now, it's a pretty light touch process. It's self-certification. So I suspect what will happen is that there will be retrospective checks on applications to try and minimize fraud. Those sorts of checks are going to be more likely if applicants default on loans or trigger the government guarantee. So I suspect the checking, if you like, is going to work retrospectively, which of course is different to a conventional loan application process where there's quite a bit of due diligence up front. And of course, that's to try and get the money into the bank as quickly as possible, because we are told that companies can expect, if they have an existing business account, to receive the loan within a matter of days. And as I said earlier, if you don't have that existing account, it will take longer because the banks need to go through their usual money laundering and know your client type procedures that we're all very familiar with. Over those application criteria. So the borrower needs to be UK-based SME, UK tax resident, and established by the 1st of March 2020. It must be negatively affected by COVID-19. So if you've got the situation, so as I say, the application forms, they look for you to specify turnover for the calendar year to 31 December 2019. So if you have started operations after 2019, but you're still established by the 1st of March 2020, the application form specifies that in that case, you're requested to put forecast 12 months revenues. So just keep that in mind. If you don't have a calendar year end, and you might need to do a little bit of analysis on your numbers to specify the turnover number that you include. The borrower mustn't be an undertaking in difficulty. I'll talk about that specifically, what that actually means on next slide. And the borrower can't apply if they've already, and that I should have the word successfully applied under the CBILS scheme. Because if you have applied for the coronavirus business interruption loan and heard nothing back yet, you can still apply for a bounce back loan. You can apply for up to £50,000. The reason I say successfully applied is because if you have successfully applied and already obtained some cash under CBILS, then you can convert the first £50,000 of that into a bounce back loan. So it is possible to do that, but that's a different process than a fresh application. And it's highly likely that you would want to do that because the interest rate on bounce back of 2.5% is surely going to be lower than what you're getting on your CBILS loans, simply because the state is backing 100%, it's guaranteeing 100% of that risk to the lender, whereas CBILS is only 80%. Now, Rishi Sunak on Saturday at the weekend, he basically said that to avoid confusion, the schemes will kind of run from £0 to £50,000 will be bounce back, and from £50,001 upwards will be CBILS. So that's how it's going to work. Now, if you can't afford to pay the bounce back loan back, I said earlier about the lobby groups going to great efforts to get the Chancellor to make these concessions. Nonetheless, they're still saying a lot of their members, particularly in sectors like hospitality and leisure and the like, are facing great challenges at the moment, and they may not be able to pay this money back. If that happens, then whilst there are no personal guarantees, whilst the state is backing this 100%, the banks will still seek to chase borrowers who default and to seize property or other assets, just like any other creditor. And if they can't do that, then they will then go to the British Business Bank as their final recourse to activate the government guarantee. I started to talk quickly about what it means to be an undertaking in difficulty, and that term, that phraseology, is defined by EU law. What kinds of businesses are captured by the undertaking in difficulty rules? Article 2 of the Commission Regulation, June 2014, if you're interested, is specified on the slide there. And I'll just quickly read through those. Basically, if you have accumulated losses greater than half of your subscribed share capital, including share premium, if you have a case where you have unlimited members, very rare, but you may have unlimited members that have accumulated losses to the same degree, if you are subjected to any kind of insolvency process or procedure, winding up order, voluntary liquidation, administration, if you have previously received rescue aid and have not yet paid that back, or if you've previously received restructuring aid or are in a restructuring plan, that's subject to a restructuring plan, then you would be considered to be an undertaking in difficulty. And if you're not an SME, then there's an additional criteria there at the bottom that you have to have a book debt to equity ratio greater than 7.5 to 1, and your earnings to interest coverage has been below 1. Basically, you've got more interest payable than earnings, and you would be meeting that sort of undertaking in difficulty. Now, when you do the application, there's a form you sign which basically says, have you been adversely affected by COVID-19? Yes or no. Are you an undertaking in difficulty? Yes or no. So it's self-certification, and it actually points you to both NatWest and HSBC yesterday had a kind of a sort of a decision tree, a kind of a checklist to go through to help you decide whether or not you are an undertaking in difficulty, so you can make that assertion with some confidence. And I'm afraid my slide that I just put up, which I completed these slides late last night, I'm afraid it's already out of date. The sharp-eyed amongst you will note there are only 10 banks on there, and earlier I said 11 have been accredited. TSB is the one that should be added. I checked earlier, and that one has gone in. As I said, this is moving all of the time. Final slide then, just to recap very quickly. This is a straightforward process. It's a 2 or 3 page application. It's self-certification. You just need that information on your turnover to December 19, and you need to then give your declaration on certain areas. I'm just going to quickly run through what those declarations are at the end of the form where you sign off. You confirm that you are in business as at the 1st of March 2020. You confirm that you've not yet obtained CBILS financing. You confirm that you're not a bank, an insurance company, the public sector, or an individual, i.e. not a business. You confirm that you're not in any kind of formal debt relief or bankruptcy type process. You confirm that you're a UK tax resident. You confirm that you're not undertaking in difficulty. You confirm that the loan won't be used to support export related activities. You confirm, and this is quite important, this was relevant to my case yesterday, that if you're part of a group, then the application is for the group. You can't do different applications for separate entities within the group. So you confirm that it's for the entire group that you're making one application. You have to confirm that this is for the economic benefit of your business, for working capital or investment. You can't just put the money in to take it out as a dividend. You confirm that you've understood the terms and the conditions, including the fact that whilst there's a prohibition on the banks for asking you to provide a personal guarantee, nonetheless, the bank says that it will seek to enforce its rights should you default before going to the government. And I think it's also important to set out that the usual rules, the Financial Services and Markets Act 2000, the Consumer Credit Act, your protections under that are not relevant here. That sort of thing where lenders have to explain in great detail about the risks you undertake and give you fact sheets and so on. That's not relevant here, and you have to confirm that you understand that. You understand that there's not going to be detailed due diligence, credit or affordability checks by the banks. So you're basically saying that you understand all of that stuff. But once you've been through the process of ticking all of the boxes, as I say, we expect payments should be made within a matter of days. So that is how simple it is. Of course, with all these things, the devil is in the detail. If you have questions or queries that relate to your specific circumstances, that is what we are here for. You can keep our websites and social media pages, please, in your bookmarks. Make sure you're checking back regularly. We're keeping those up to date every day at the moment. Subscribe to our emails. And our email address is up on the screen now, hello@scriptandbland.co.uk, or you can reach us on the telephone number shown. But for now, thank you very much for attending this webinar. We hope you found it useful. And if you are putting a bounce back loan application in, best of luck, and do stay in touch with us. Thank you very much.